Now speaking, Allison Malkin, Investor Relations. During RH's first quarter of fiscal 2023 earnings call, Chairman and Chief Executive Officer Gary Friedman and Chief Financial Officer Jack Preston provided a legal disclaimer that their forward-looking statements involve a number of risks and uncertainties that could cause actual results to differ materially. They refer listeners to RH's SEC filings and press release for a more detailed description of the risk factors that may affect their results. Non-GAAP financial measures were also discussed, with additional information and reconciliation to GAAP measures available in the financial results press release. With that, the call was turned over to Gary Friedman for further discussion. Now speaking, Gary G. Friedman, Chairman and Co-Chief Executive Officer. RH has raised its revenue outlook for fiscal 2023 to a range of $3 billion to $3.1 billion and lowered its outlook for adjusted operating margin to a range of 14.5% to 15.5%, which includes an approximately 150 basis point drag due to the ramp-up of its global expansion. This summer, RH will be introducing itself to the UK with the opening of RH England, the gallery at the historic Ano Park. This 73-acre estate features 3 full-service restaurants, 3 secondary hospitality experiences, and a library of rare books and artifacts. RH England is expected to act as a symbol of RH's values and beliefs as the company embarks on its expansion across Europe, with plans to open in Brussels, Düsseldorf, Munich, Madrid, London, Milan, and Sydney over the next few years. Additionally, RH will be introducing a new gallery design in Palo Alto and Cleveland, as well as opening RH Indianapolis, a 178-acre estate on a private lake, in 2021. RH's long-term strategies include product elevation, platform expansion, and cash generation. Product elevation involves elevating the design and quality of RH products to attract higher value, more discerning customers. Platform expansion involves expanding the RH brand globally and transforming North American galleries, while cash generation focuses on turning inventory into cash and optimizing costs. RH also plans to move beyond curating and selling product to conceptualizing and selling spaces by building an ecosystem of products, places, services, and spaces that establishes the RH brand as a global thought leader, taste, and placemaker. These efforts include RH Guesthouses, RH Yountville, RH1 and RH2 private jets, and RH3 luxury yacht. RH Media, an online content platform, will further amplify RH's authority as an arbiter of taste. Finally, RH Residences will move the brand beyond the home furnishings market into the $1.7 trillion North American housing market. Citi analyst Stephen Zacconi inquired, Gary, what led to the increased markdowns and how did that factor into your outlook for the business when you spoke to us at the end of March? Gary Friedman replied, I can confirm that we have seen an increase in demand headwinds and slower cycling of discontinued inventory. We are taking the necessary steps to clear out old product in order to bring in new product, which includes increased markdowns. We anticipate that it will cost us more in terms of markdowns to transition our galleries than expected. Citi analyst Stephen Zacconi inquired, what is your perspective on the UK market opportunity now, particularly in regards to size and competitive environment as you prepare to open your first gallery there? Gary Friedman replied, I believe our introduction to the UK and wider Europe is a unique opportunity. We are taking a different approach, prioritizing creating the right conversation and positioning ourselves as thought leaders rather than immediately focusing on maximizing commerce. Our goal is to create an inspiring retail experience that will be the most talked about and admired store of its kind. We are confident that this approach will be respected and inspire people in the long run. Morgan Stanley analyst Simeon Gutman inquired, can you confirm that the domestic business is hitting your forecast and that the change to the guidance, other than markdowns, is mostly due to the inclusion of Europe? In what time frame should we expect for EBIT margins to reach 20+ with the mix of Europe, US, hospitality and luxury? Gary Friedman replied, I believe our new product transformation will bring the best value proposition we've ever seen. We've worked hard to create an unmatched assortment of design, quality, and value. We have a unique strategy that looks at countries in Europe like states in the US, and we have a clean slate to build out the right infrastructure for our brand. Our goal is to disrupt the market from the high end down, creating a real outsized share of the market. If we get reasonable demand and are smart about capital allocation, I'm optimistic that we can return to 20%+ operating margins long term. Bank of America Merrill Lynch analyst Curtis Nagel inquired, so Gary, could you provide an update on the progress of the contemporary line rollout and what the reception has been? Gary Friedman replied, we are pleased with the initial response to our contemporary collection, which has only been rolled out to 4 galleries. We held back on further expansion as we had many new offerings and choices to consider. The pricing was too ambitious and did not offer the value equation that we strive for. We have since reevaluated our sourcing, challenged everything, and are now ready to reveal a meaningful value equation connected to design and quality leadership that will have a major impact on all areas of our business, including contemporary. Our contemporary collection has just 5 full furniture collections, and this number is set to double. With these additional collections, the contemporary line will look entirely new and unique and will demonstrate our commitment to offering value. Bank of America Merrill Lynch analyst Curtis Nagel inquired, Gary, could you provide more detail on the format for Cleveland and Palo Alto? Specifically, what arrangements have been made for layup at each location? Gary Friedman replied, yes, our product transformation is the largest in our brand's history. We're moving away from gray to create a platform that amplifies the value of our product. We have timelessly architected galleries with fresh air, natural light, and balanced symmetry, and we will be introducing new colors, walls, paint, finishes, and possibly replastering the outside of galleries from gray to a beautiful buff color to give our consumers an exciting and relevant canvas for the next 10 to 15 years. Jack Preston replied, size. Kurt, Jack here. Palo Alto and Corte Madera are both about 48,000 in size. Cleveland is roughly the same. Guggenheim Partners analyst Steve Forbes inquired, are you seeing any differences in regional trends that could impact the revised revenue outlook? Jack Preston replied, Steve, regional differences exist, but there's nothing to suggest any major trends. Our policy is to only comment on significant changes, such as what happened in the oil markets 1 year ago. Guggenheim Partners analyst Steve Forbes inquired, what is the potential magnitude of input and supply chain cost relief you see in the near future? Jack Preston replied, something like that. In regards to supply chain costs, ocean freight is a primary component. We have seen an overall increase in cost due to the global pandemic. However, we are actively mitigating this rise through our efficient operations and exploring new partnerships. Guggenheim Partners analyst Steve Forbes inquired, what cost relief measures are in place to enable further investment in a better value proposition? Jack Preston replied, we've already seen cost relief that we've been able to put back into product prices. We have managed to secure favorable ocean freight contracts, which has resulted in a slight margin lift from May 2022 onwards. UBS analyst Michael Lasser inquired, Gary, could you speak to how increasing or reducing pricing would impact sales and the profitability of the business? Gary Friedman replied, you can see that our long-term strategy is to focus on design, quality, and value. We believe in providing customers with the best products at competitive prices. To achieve this, we have a platform that allows us to scale and offer disruptive solutions to the markets we are targeting. We have also been through pricing cycles, supply chain disruptions, and inflation, which has caused us to reevaluate our pricing strategies. We understand that in the age of the internet there is more visibility and choices than ever before, so we want to ensure we create a great value equation for our customers while maintaining our brand integrity. As a result, we are making long-term decisions that will reward our shareholders and investors in the future. UBS analyst Michael Lasser inquired, what is the expected rollback in price for the assortment, on average? Gary Friedman replied, our product is going through a major cycle right now, and the Cloud Sofa, which we introduced in 2015, has been a great asset for us over the past decade. However, with the increased competition from other companies offering knockoffs, our price point for this sofa will need to be more competitive. We don't anticipate making a broad rollback, but rather a shift forward as we introduce new designs that offer more value based on design, quality, and price. Barclays analyst Seth Sigman inquired, what other levers or opportunities do you have to address inefficiencies given the markdown pressures and extended demand outlook? Gary Friedman replied, we had a meaningful change in demand and had to optimize the organization. We always look for efficiencies and better ways to do things, but it's ultimately dependent on the macroeconomic environment, particularly the luxury housing market. We have a lot of new product coming that is revolutionary from anything we've done in the past and don't have to resort to sale emails or promotions to drive demand. We think the next 12 to 24 months for us will look very different than our competitors. Barclays analyst Seth Sigman inquired, can you explain the rationale behind the increase in the low end of sales guidance for the year? Are we to interpret this as optimism around new product or expansion? Gary Friedman replied, we are confident in our new product launch. All samples, costs, negotiations and value equations have been finalized. We are presenting the product in a way that will make the most of our available space and productivity per square foot. We are replacing existing products with this new product and have done the calculations to estimate the weekly performance at the appropriate margins. We anticipate that there may be greater headwinds which could result in deeper markdowns than expected. However, we remain optimistic as long as there isn't another major macroeconomic event. We think that even if there is, our new product should create some form of inflection. We acknowledge the potential risks associated with regional banking issues and are taking a cautious stance given the possibility of further impacts. Jefferies analyst Jonathan Mitashevsky inquired, Gary, could you provide insight on customer spending patterns and how different income cohorts are responding in the RH business? What percentage of your members would you consider to be low quality and what implications does that have for the membership trial? Gary Friedman replied, yes, homeownership is a key source of wealth accumulation and investment for ultra-high net worth individuals. As people move up the economic ladder, they tend to purchase multiple homes that are increasingly larger and more luxurious in order to impress guests and create a hotel-like experience. This type of investment is seen in second homes which often have twice as many bedrooms as primary residences and are further furnished with high-end furniture. For those who are even more affluent, investments also include planes and yachts, as demonstrated by our RH1, RH2 and RH3 projects, which feature 30 to 28 bedrooms. Gary Friedman replied, RH England is going to be the first place to see our new products, with over 60 furnished rooms, 70% of which will be entirely new. We're investing in creating a luxury brand and introducing it in an entirely new way, earning the respect of those at the very top of the economic pyramid. Our restaurant has been listed in the Michelin Guide, and we're getting feedback from the world's best chefs. We are positioning ourselves for the future, expecting increased spending from the baby boomers who are living longer and have more money to spend. We believe that, no matter what happens in the economy over the next 6 to 12 months, we are on a path to a profitable model and an enduring brand. Jefferies analyst Jonathan Mitashevsky inquired, do you see an increase in luxury Italian brands targeting the U.S. as a threat? Gary Friedman replied, yes, our value proposition is much greater than the Italian brands. We provide a complete lifestyle point of view and offer furnishings and design for an entire home. Plus, we have made in Italy products and control our own distribution, which gives us better pricing power and an edge over competitors with convoluted platforms and multiple dealers. While they build great products, ours position us much better. KeyBank Capital Markets analyst Brad Thomas inquired, Gary, could you update us on how you plan to manage supply chain and logistics for furniture customers in England? Jack, can you provide any insight on the financial impact from England in the second half? Gary Friedman replied, yes, I am confident in our supply chain experience. Our team has been on the ground for 18 months to 2 years and we have the necessary processes in place to handle returns efficiently. We are working on optimizing our reverse logistics capabilities and establishing an outlet network. Our experienced staff is well equipped to ensure the delivery of quality service to customers. Jack Preston replied, yes, we have a total of 13 RH employees in our England gallery, 8 on the gallery side and 5 for hospitality. We also have one of our best supply chain experts on hand. Gary Friedman replied, we are pleased to report that we have seen an overwhelming response to our invitation for the upcoming opening party. We initially anticipated X number of attendees, however we now project that we could potentially see 2x the number of people. This is a testament to the strength of our brand and services, as well as the excitement around our launch. We urge those interested in attending to let us know soon as we will be capping the event soon. Jack Preston replied, at this time, our projections for England are modest. We have not given an exact figure, however Gary initially estimated it to be between 50 to 250. We will keep you informed of any updates and share data when we have it. However, it is not significant enough to include in our guidance. Oppenheimer and Company analyst Brian Nagel inquired, for Gary, what key factors do you see as necessary to shift the macro environment from a headwind to a tailwind for RH? Oppenheimer and Company analyst Brian Nagel inquired, what macro factors do you see as most critical for your customers' success in the current environment? Gary Friedman replied, yes, I think the key is finding the bottom of the cycle and establishing the new baseline. We need to get through the macro headwinds and have interest and mortgage rates stabilize. Once that happens, we should be able to grow off the new base. It's difficult to predict where the bottom is given this is the first time we're navigating a cycle like this while positioned so high in the market. Additionally, our business is now almost entirely furniture focused, with only rugs, lighting, bedding, and bath towels making up the rest. This means we may swing further than other companies during this time. Lastly, commercial real estate is still an issue and the luxury customer is the most aware of the challenges, which will impact activity. Cohen and Company analyst Max Raklenko inquired, what is the latest view on pricing products in Europe compared to the States and how profitable would galleries be at maturity? What cost structure should we keep in mind? Gary Friedman replied, yes, pricing is a topic of debate. We'll do the calculations and ensure we have a comprehensive understanding before making any decisions. Although our plans may not be perfect, we are confident that our strategy is sound. We will learn a lot during the launch process and make adjustments as needed. In 6 months, we'll have a better picture of where we stand on pricing. Wedbush Securities analyst Seth Basham inquired, do you anticipate the inventory situation to improve by the end of this fiscal year? Gary Friedman replied, yes, our team is confident that we can reach our goals by the end of the year. Wedbush Securities analyst Seth Basham inquired, question, do you expect the 70 new collections to be in meaningful quantities and have a material impact on sales this year? Gary Friedman replied, we believe we'll be in a very good position by mid-second half of the year. Despite some potential delays in production and final finishing, we expect to have stock available by late third quarter. Our job is to make the right investments and bets with our inventory, even though it's hard to predict consumer response exactly. We're excited to have more data available by the end of the third quarter so that we can make better decisions going forward. Wedbush Securities analyst Seth Basham inquired, do you see any challenges in converting high-net-worth customers to shop RH instead of buying timeless designer pieces? Gary Friedman replied, yes. We offer a great value compared to our competitors, especially luxury brands and showrooms. Our products are often copied by interior designers, but that doesn't stop us from providing disruptive value and leaving our competitors struggling. Gary Friedman replied, thank you for your interest in RH England. We look forward to sharing more news with you during our next quarterly earnings call.